What does the Trump tariffs mean for world growth? At what point does it actually start biting, if at any point it starts biting?
Yeah, well, this was one of the worries, frankly, that we had from November of 2016, the implications of any kind of trade escalation, any type of trade restrictions. And our view has been that, given how much Trump talked about this in the campaign, that eventually you would have some type of restrictions, and on the margin they certainly would be negative. We're starting to see that now. It was always a question of how far they would go, especially with the exemptions we have so far for Canada and Mexico. We're expecting that to be a trend that we're going to see with a lot of the other major trading partners, and that hopefully will avoid an escalation. But of course, as we know with Trump, it's quite risky to predict what he's going to do.
Yeah, Michael, your take on this?
Yeah, I completely agree. I mean, with Trump, there's a certain pattern that he goes in loud as a starting position, and then sometimes there's more pragmatism towards the end. What potentially could make us a bit, or what makes us a bit nervous, is to see Gary Cohn leave, because it kind of tells you that even internally there's not a pre-agreed strategy, which is maybe go loud at the beginning, come to a not so harsh compromise at the end. So I think there is some nervousness around it, and will it be interesting how the market takes it, because Donald Trump obviously likes to look at the equity market, and well, the trend is not so rosy anymore as it was a few weeks ago.
Michael, let's look at the bond market where you're focused at BlackRock. I mean, there's an ambiguity here. I guess rates could cut higher or lower off of the idea of tariffs, the idea of a war. Not that it's going to move it by tenths, but what's the dampening there? Is it towards a lower interest rate, more tepid economic growth, or does it cut the other way?
Well, I would argue if we really go into the more negative scenario, that we see basically countermeasures from China, maybe countermeasures from other countries, I would actually say then probably it tilts the way that the impact on uncertainty, the impact on economic growth is bigger, and then it will probably say interest rates will be lower in the near term. In the more longer term, you can obviously make arguments that more self-reliance, less import, less price competition will increase inflation. But I think that time-wise is a second-order effect.